purpose of this channel is to help you master relationship banking, make those relationships profitable, and use your banking relationships to increase your net worth. This particular video, we're going to be covering a significant shift in the banking space, which is going to be the acquisition of a major fintech in Brex, purchased by Capital One. What this means for you as a small business owner, what this means for business credit and corporate cards, what it means for the banking space as a whole. There's a lot to cover in this short video, so I'm going to be bringing up one of the articles covering this recent development in the banking space. And again, it's going to be very, very important for entrepreneurs and small business owners, or prospective entrepreneurs and small business owners, to understand what this really means for your access to capital, corporate cards, and as well as the banking space as a whole. So I'm going to pull up this article really quick. We're not going to actually skim through the actual article. I just want to pull it up so you know that it's real news. I'm just going to give you my talking points on this and give you the highlights in this short video. So why does this deal matter in the first place? Capital One just agreed to acquire Brex for $5.15 billion in cash and stock deal. This isn't just a fintech acquisition. It's a signal that flares for the future of business banking. This is very important stuff. This is going to be one of those catalysts that kicks off significant changes in the banking space. So as a banker, this confirms something different from me that I've been saying for years. Banks don't want to partner with fintechs anymore. They want to own them. So let's break down the deal. The price, $5.15 billion versus Brex $23.3 billion valuation in 2022. Very interesting that they sold at such a dramatic discount. It's clear fintech valuation reset, but not a failure. Let's talk about it for a quick second. The structure is going to be cash and stock, and it's expected to close mid-2026, so sometime in the middle of this year at the time of this recording. Leadership stays. Brex CEO Pedro Franceschi, excuse me if I'm pronouncing that wrong, continues to lead. Why Capital One? This is important as well. Massive balance sheet, deep regulatory muscle, and $6 billion annual marketing budget. So they got deep pockets, good connection with regulators, and they were in position for this purchase. So in the big picture, Brex gets scale. Capital One gets world-class software overnight. This is where it starts to get interesting. Why is this huge for the banking space? The deal accelerates bank fintech convergence. Instead of building tech internally over 5 to 10 years, banks are buying proven platforms. This is why the game changes. Traditional banks are now coming out of the dinosaur paper file era, and they're allowing these fintechs to build themselves up with all these technologies and this data-driven analysis, and they're just simply going in and snapping them up before they get too high in valuation. Capital One is positioning itself as a software company with a banking license. That's crazy. Think about that for a second. That's the kind of data that they're going to be pulling in, purchasing this fintech. That's what this move is going to signify. It's not just a lender anymore, but a financial operating system for businesses. Combined with Capital One also acquiring Discover, this signals aggressive consolidation by tech-forward banks. You got to keep in mind, competitor-wise, JP Morgan Chase is an example of a firm that was not happy about Capital One and Discover's merger. So what does this mean? Expect smarter, faster, and more integrated banking tools. Corporate credit cards, spending controls, expense management, real-time insights. There will be benefits to this merger. So credit decisions become more data-driven and not just tax return-driven. This is going to be interesting. You're no longer going to be expected to just hand over a file of your most recent financials, your financial statements, your tax returns. Nah, they're going to be looking at a totally different set of markers when they're underwriting you. Banks now want sticky operating relationships, not just deposits. I've been talking about relationships since the inception of this channel, and it feels like I just was ahead of my time. This is where the rubber is going to meet the road. Entrepreneurs who embrace clean books, digital spend management, integrated banking platforms will be far more bankable going forward. Bankable. If you've been watching this channel for any length of time, the very first video I uploaded on this channel was talking about bankability and being bankable. That was 3.5 years ago. Pressure on smaller and regional banks. Now, this is important too. This is a little bit of a drawback. Smaller banks cannot compete on tech spend, marketing, and integrated platforms. This creates a two-tier banking world. Big banks with software and capital, smaller banks forced to niche down or partner heavily. Now, I am concerned about this because smaller banks fill the void in personalized service and localized decision making. With bigger banks taking up more market share and using their scale, throwing their weight around in the banking space, it will force smaller institutions to have to niche down on what they're providing their banking and services for and their lending for, or they're going to have to partner a lot, which it kind of ruins their autonomy and sovereignty and will taint localized decision making, unfortunately. So what can you expect? More fintech acquisitions are going to be on the way, and we're going to cover them very fast on the channel like we did on this particular article. More consolidation, which is pros and cons. Fewer basic banking checking relationships. So hopefully you're ready for a lot more integration. So the future of banking, all right, let's wrap this up. This deal validates Brex model, even at a lower valuation. The future of banking is banks plus software plus data, not branches, not rates alone. Say that one more time. The future of banking is going to be banking, software, and data, not just branches and rates alone anymore. So for entrepreneurs, your bank choice now affects your growth tools, not just your money. We're now entering banking 3.0. Your banking relationship decisions now will affect your growth tools, not just your money. It's not just going to be about your deposits, your cash flow management, bookkeeping. All of these things are now going to be integrated in one place. And if you're not selecting the right relationships, you're not going to have the tools you need to grow. Comment down below and let me know your thoughts, your feedback, potential concerns, the opportunities you see around these shifts in the banking space, how big banks are snapping up fintechs. If you're a business owner or an entrepreneur and you've dealt with Capital One or Brex, let me know your particular thoughts based on your relationship and experience with these institutions. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. If you're new to the channel, I'm a relationship banker and a business banker by trade, 14 plus years in the industry, licensed across the board in FINRA, life insurance, mortgage originators license, and small business banking certified, managing an active client book of $25 million in consumer and small business deposit and investment relationships. I appreciate you tuning in. Like, comment, share, subscribe, support the channel so the channel can continue to support you. Get in the description section down below and time with me on Instagram. And I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.